Here are 7 speculative stocks that could be worth the risk. Let's get started. All right, guys, we're going to quickly explore the high risk, high reward world of speculative stocks. We have 7 companies today that we're going to discuss kind of at a rapid pace here. So to our viewers, get ready for this. A lot of great information coming your way. But these are some names that we haven't really covered on the channel. Maybe that's because they're not for the faint of heart. They do come with the potential for significant losses, but also potentially life-changing returns. So we're talking about everything today from the emerging sector of flying cars to advancements in biotechnology and the ever-evolving landscape of technology and AI. So let's get started here. First, we have vertical aerospace. What makes the eVTOL sector, particularly vertical aerospace, a potentially revolutionary investment?
Well, the space itself is something that is becoming very attractive to investors because the technology is has so many use cases. In the case of vertical aerospace, the primary use case right now is what would you do to get people from airports into busy urban areas, and these vertical takeoff and landing vehicles are perfect opportunities for that. It's also got uses in areas like disaster relief and in making sure that medical care and equipment can get into certain areas. What I liked about vertical aerospace in particular is they have a prototype model that's already logged over like 1,000 test flights. Now, that's obviously the reward for investors is if they can get this approved through the FAA, they're going to be generating a lot of revenue. This is going to become a very profitable investment. The risk is there were 2 risks. Number one is, first of all, the company, as of December 2023, they only had about enough funding for about a year of operation. That has since changed, and I put that in the article that I wrote. The founder and CEO has pledged to infuse the company with about $50 million more in cash. So they've got enough funding through about the middle of 2025. That should be long enough to get them to get their vehicle approved, hopefully, and that would be good. The other risk is that the stock could potentially be delisted, and that's part of something that you have to pay attention to with speculative stocks.
Yeah, right. I think eVTOL is a really great space. Like Chris says, there's plenty of risk in this sector, so you have to be real careful with it. Capitalization is a big deal with vertical aerospace. And in this space, I actually favor 2 other companies, Joby and Archer Aviation, which are a little bit further along in their FAA approvals that are probably better on track to be profitable or have operations in the next year or so.
All right, good notes there. So then moving on to the next one, there's Weave Communications. This is a new one for me. Comment down below if you've done any research on this one. But considering its current unprofitability, but expanding margins, how does Weave's business model kind of position it for future profitability and growth within its market?
This would be one that I'd be interested to hear from any, particularly dentists and doctors that have maybe are using the technology today. The benefit of the technology is that what it does is it integrates a lot of the back office functions that healthcare providers have to deal with, and it integrates it all into one common communications and engagement software platform. And though the idea is that it's supposed to create a more frictionless experience, not only for the doctor, but for the patient, and the doctor can concentrate more on doing what they want to do, which is practice the medicine, and the patients get a more seamless experience, not only through billing, but in terms of follow-up and texts and email communication and the like. The reward here is the company believes it's only scratching the surface of its total addressable market. Of course, the risk is that the growth may stall. And again, as you pointed out, Lacey, the company's not profitable yet. So that would be a risk, is if they can't keep up the growth at the trajectory they're on, they're not going to become profitable, and that's not going to be good for the stock.
Yeah, right. I see this one as a potential takeover candidate. It is presenting some value. It's on the verge of a hyper growth phase. Margins are improving, so if it can really cross that threshold, I could see a larger client retention, client service company looking to buy this business.
Okay, number 3, Dynagas LNG partners. With the strategic importance of LNG rising, how does Dynagas contract backlog and their fleet utilization rate mitigate the risks that are associated with considerable debt?
Yeah, Lacey, that's a great point you're bringing up. This company does have a lot of debt, and I pointed that out in my article. One of the things that helps this company, though, as you're pointing out, is there is a lot of demand for LNG right now. The company has a backlog of projects and contracts that are going to carry this, that are going to deliver revenue far out into the future. The company did a really strong job of paying down some of that debt in the last year. So they're, and again, it's a small fleet, but it's fully booked. They've got revenue, like I said, booked out for several years. It looks like this is a sweet spot if you're going to jump in an LNG. However, having said that, you know, there's a lot, some of the big oil companies also provide LNG transport capabilities, including one that you and I have talked about a lot that I personally like.
Yeah, right. Talking about the debt, you know, as solid as the company's outlook appears to be, it seems like the preferred shares may be the way to go. They're yielding like 7 or 8%, I think. So maybe look that route, you know.
Okay, Sologenics now. Given the speculative nature of biopharmaceutical stocks, what makes this a lead candidate? Highbright, a compelling investment opportunity despite inherent risks.
Well, the reward here, as with any biotechnology company, is what happens if they're right. Obviously, the risk is what happens if they don't get FDA approval. What happens if the drug can't get on market? But in the case of Sologenics, they've got a therapeutic. I think Highbright, you were right, and it's a novel treatment for early stage cutaneous T-cell lymphoma. It's been granted orphan drug and fast track designation in the United States. It's in phase 3 trials right now. So if they can get that out of phase 3 trials and get that on the market, the stock is going to shoot much higher. Again, the risk is that it doesn't make it through, or that the phase 3 trial results come in less than desirable.
Yeah, just like you say, the risk in this one is the trials. This company appears to have been like on the verge of making it across that threshold a few times over the last couple of years. Hasn't quite done it. Fingers crossed, maybe this time it will.
All right, number 5, Riskified. In an era where e-commerce fraud is on the rise, as we've seen, how does Riskified's AI-powered platform offer a solution, and what does this really mean for its long-term investment potential?
Well, right now, retailer fraud is big, and this, by retail fraud here, we're not necessarily talking about retail theft, but we are still talking about there's a lot of fraud that's potential, especially now that we're going into the e-commerce space. Riskified is helping companies manage that. Revenue's been up consistently in the first 3 quarters of this year. Obviously, this is another company similar to what we were talking about with Weave. The success or failure here is going to be if they can continue to increase their total addressable market. That's what it really comes down to.
Indeed. I think like Weave, this is another takeover target. They've got a solid business. It's definitely got applications. So it's just a matter of if they can execute on it and get those profits to flow.
All right, now the digital advertising market is evolving. In comes PubMatic. How does this self-reliant infrastructure programmatic advertising platform stand out from the competitors?
The reason why it stands out from the competitors is because PubMatic, it does not rely on third-party cloud computing platforms to run their infrastructure. So they have the ability to dial up or dial down CapEx spending as they need to do it. This company's just, they're in, as you call it, the programmatic advertising space. What they're trying to do is link up publishers and app developers with advertisers in these real-time bidding auctions so that they can sell their advertising space at the most advantageous price.
Yeah, to me, this is one of the more interesting stocks on this list. They're real close to profitability. I see them crossing that line pretty soon. It also appears to be presenting a value. So this is definitely one that speculative investors may want to check out.
Okay, lastly, we have iCAD. As AI becomes more and more integral to healthcare, particularly in cancer detection, what challenges and opportunities does iCAD face, and especially when considering its partnership with Alphabet?
So this one is the one that's probably the most intriguing to me. As we're all aware of it, as we're talking here now, breast cancer is the leading cause of cancer in women. It's also a cancer that we've learned that if it's caught early, there is a better chance of survival from it. So iCAD comes to this with the idea of you have mammograms. It's building artificial intelligence into that process to help, hopefully, detect cancer earlier and maybe find it in cases where maybe it otherwise isn't showing up. Obviously, the idea is then to detect it at the earliest possible stage. It's intriguing for that reason. Obviously, that's a reason why a company like Alphabet is going to want to partner with it. I would sit here and think, as Thomas has brought up with a couple of them, that would lead me to believe that you might see this company as a takeover target for another company that wants to come in and have this as an offering.
Right. I think this is probably the most interesting stock on the list. I think that AI and healthcare is a big business, future business. AI is supposed to really advance drug discovery and detection. It should be a huge moneymaker. So yeah, I'm on board with this one for sure.
All right, guys. Well, it's kind of fun to cover some of these names that we don't typically think of. I hope this was eye-opening to our viewers. Comment down below if you're going to be looking into any of these speculative stocks we mentioned today. We always love to hear what you guys think. As always, we will keep you up to date on the latest market insights right here at MarketBeat. So stay tuned for the next one. Thanks, guys.